Welcome back to Table Talk. My guest today is AppTech TV. Welcome back, my friend.
Hey, how you doing?
Pretty good. I'm pretty good. So, today we are going to talk about our bear market strategies and where we think the bottom is. Um, Actually, this panel was supposed to be a lot bigger, and we will have one, and we're going to talk about the same thing with more traders. But for now, it's just going to be me and AppTech TV, and we're going to get this started. So, I'm going to go ahead and share my screen. Okay, let me make sure we're good. Go ahead and do
I can
this.
see it.
Can you see it big?
Yeah,
Okay,
I'm watching on my second monitor.
I got you. So, bear market strategies. All right, so what I'm going to show you first is the daily. All right. So, this is where I got out. This is for next bear market. This is something to really look at, okay? When we start making these lower highs right here on the daily from this high, I mean, we were making higher highs here. I mean, we had a lower high here, but that was a little bit of a fake out. But you had higher highs. So when you hit this lower high and you got rejected, you got below your 21 and your 50. All right. Notice how you were above your 21 this whole time. Like I said, this was a little bit of a fake out. You had a BART. What a BART is, I'll just show you real quick. Really don't have nothing to do with anything, but a BART is when you go straight down and then straight back up. It can also work to the upside or to the downside. But yeah, so that we barred it out, had a little bit of a bear trap. But basically, what I'm talking about is the lower highs. Got rejected from the 21. You were under your moving averages. All right, so that let you know that the story has changed. Okay, so made those lower highs. I got out about right here after we had, no, it was about right here. After we started making a few lower highs, I got out about right here at about 55K, and I sold everything. Um, and then when we had this multi crossover of the 21 and the 50 over the 100, I shorted. I shorted all the way down to about here, to about 42,800. I did not catch the whole move, but I never do. Once you cross this 21 and your 50, you could have still held your short. That's the more conservative signal. This is one of my signals. If you want to watch how I explain my signal in a previous video, go to the trade breakdown, watch it, and make money. All right, go to that video and let's continue. So, yeah, that's basically how I got out. And then I held cash. I didn't DCA in early. See, that's the thing. You don't want to start too early because then you're just, I mean, you're wasting opportunity cost. Wait a while. Wait like a year. You know what I mean? Once those lower highs happen and we do enter a bear market, wait like a year to start DCAing. All right? Because then you're closer to the bottom. Okay? So I didn't DCA at all, and I still have not DCA'd. Now, this right here, we're in a range right now, and this is the first range we've been in, for since the bear market started. So this could be an accumulation zone, but honestly, I think it's redistribution. And if anybody's familiar with Wyckoff, this could be a Wyckoff redistribution pattern. Now, what I have here is a measured move, all right, for this range right here. And I also have these boxes. I'm going to put this right here for now, all right, and then we're going to come back to it. I have these boxes. All these boxes I've had drawn since right here. I've I've made these boxes using Fibonacci, VPVR levels, and previous support and resistance from the previous bull market. And so that's where I got these boxes, okay? Now what we're going to do is we're going to zoom in. We're going to zoom in down to the 1 hour. Now, check this out. All right, this measured move that I put up there. Where's it at? I lost it. Oh, there it is. Okay. This measured move goes right to the bottom of this green box at 11.8. 12K. All right. But so what I'm going to do, all right, so look at this. Show you something else. I'll show you where I'm DCAing at, and that's kind of going to tell you where I think the bottom is. All right. So I got these green boxes right here. As you can see, I have an alert right here to tell me where, to start DCAing at 13,850. And then this is where I think the bottom is. All right. So right here, I'm going to be DCAing from 13.1 to 12K. And then if it breaks 12K, I'm going to stop DCAing until it gets to 10.3. And then I'm going to start again. Even if this is the bottom, I'm still going to have extra cash because it's going to go into accumulation zone. So even if it starts working its way up and it starts like making a higher high on the weekly, then I'll continue to DCA on the way up. But I will have cash after this zone is hit. But I will start DCAing heavy in this zone if we get down there. I'm not saying that we're going to get down there for sure, but that's my perspective. All right. So, yeah, I mean, in a bear market, you got to stay nimble, especially if you're going to try to trade. I don't long. I really don't long unless it's like a short-term scalp. But as for swing trading, I don't long in a bear market. Like I said, I do long for short-term trading, like ranges, little scalps. You know what I mean? Like I'll do that, pop some nice leverage on it, which I do not recommend for new traders. Do not use fucking leverage, okay? Um, that's just my advice, okay? I've been doing this for quite a long time. Uh, and that's what I've learned. I used leverage in the beginning and I got fucking wrecked, okay? Uh, so yeah, just stay nimble in a bear market, man. Shit can get real ugly. You just want to watch, if you're gonna, don't sell the bottom. You know what I mean? Like not financial advice, but I really wouldn't advise selling right here unless you got, unless you're just real confident that it's going lower, which I am, but this isn't financial advice. If you sell and this is the bottom, that's your own damn fault. All right, I'm not your dad. But yeah, I would recommend having some extra cash on the side. If you work for a living, just start building up a cash position. You know what I mean? Like start building up a cash position so that you can take advantage of this opportunity. This is the best opportunity of our lives right here. I mean, with the macroeconomic environment going to shit, everything that's happening, Bitcoin's already in a bear market when this is happening. Okay, so take advantage of it. You're never going to get another opportunity like this in your life. Like we're going to go low. I think we're going lower. All right. A lot of people don't, and that's fine. A lot of people are bearish, but they really don't even know what they're talking about. They're just following other people, but so they have like position bias. But and then the people that want it to go longer just don't want to lose any more money, so they have position bias. And I'm not talking about everybody, of course. I'm just saying a lot of people. Um, so yeah, just have a cash position, stay nimble, and yeah, I mean just watch longing. You know what I mean? So that's really about it for me. I'm gonna turn it over to AppTech TV and see what he has to say.
All right, let me just quickly set up my charts real quick since I'm still sort of working on that. My computer restarted earlier during the day, so that's sort of messed up my chart layouts. Don't mind, just give me a quick second.
You're good.
Let me load up the XBT charts. ES1, XBT divided by ES1 since I
While he's doing that, I would say if you have a large cash position, you could start DCAing here. You know what I mean? Just in case this is the bottom. Or if you, like I said, if you have a large cash position, you can just, DCA on the way down. Now, if you have a short cash position, you'd rather want to try to get real close to the bottom. You're not going to call the absolute bottom, but you can get close. I try to get 20% from the top or the bottom. That's what I try to do. 10 or 20%. As close as I can get, but I never call the exact tops and bottoms because I look for the lower high or the higher high, higher low, lower low, stuff like that on higher term time frames like the daily and the weekly. and that will tell you where the top and the bottom is. And plus, we had bearish divergence from the two tops in the bull market. We had two tops and we had bearish divergence there as we made a lower high. That told you that the bull market was over. It was on higher term time frames like the weekly. Look for that kind of stuff at the bottom, okay? Once we have like, some serious bullish divergence, higher low, stuff like that. And yeah, I mean, look for something like that on a higher term time frame. That'll let you know that the story has changed, and then you can prepare accordingly. All right. So looks like he's got his computer going. We're gonna go ahead and turn it over to him.
All right, so I have like about one, two, three, four, five Bitcoin charts, so we're gonna really dive into it. I want to start on the higher time frame first, just because well, we are going into a higher time frame accumulation zone, so that's what I'm looking for. So essentially, this is the Bitcoin 64K top. We all knew that. Got yourself a low deviation right there. Obviously we have this key swing low. And obviously, on the smaller time frames, if you really zoom into it, we've broken below it as resistance. So the next logical area of support is this demand zone or order block. The move down before the move up, the crazy move up because of quantitative easing, wherever you want to call it. So that's the next logical area for price to go to. So let me see. So let me go on this chart. This is the XBT or BTC divided by ES1, which is the S&P 500, the stock market, and you can see sometimes you can use this chart to find if the stock market is doing stronger than Bitcoin. So obviously that's been the case recently. Now to quickly look at ES1 as well. So we're in this so these ranges are drawn by the 2021 yearly candle. So basically, this is the yearly open and this is the yearly close. You can see it's also in confluence because right here, resistance, deviation, retest right there, and that's the sell-off. And right here is the mid-range. You can see support, deviation, rally. Right here you can see flip to resistance. Obviously, the 21 yearly open has acted as a double support. So that's kind of why the stock market is rallying while Bitcoin and crypto is obviously falling. Well, that's the technical reason behind it. I'm sure you guys all know the FA reason, which is FTX. So you can see this is the key level of mid-range. You can see resistance, deviated, retest. So zooming in now, you can see we have maybe I zoom too much in. So short term, right? We have see here. This is the I didn't use this swing. I use this level because this is the resistance. Resistance flips to support rally. You can see you got yourself a retest or deviation right there, and then retest, bearish retest, sell off, and you can see resistance here. So right now we are currently ripping higher. Um so it seems like the stock market is obviously doing better than crypto, but what would get me bearish or shorting the stock market
Why?
is
Why do you think the stock market is doing better than the crypto market?
well, from a technical standpoint, it had so basically, let me zoom back out again. So you can see this is a 2021 range low. So we had one opportunity to get below it, and then we had another chance to get acceptance below the level. I'll show you what acceptance means later. But now we failed to have acceptance below the level. So that's the technical reason why the stock market is doing better than crypto.
Okay.
But we all know. I mean, everybody knows about
Right.
FTX.
Right.
So, yeah, I'm
Okay.
just zooming in right now. So I could derive another mid range, which I mean, I'll just use this level just because it's better if I do it that way. So stock market, so you can see we got some sort of like an inefficiency right here. This is an inefficient down move. So right now we are sort of going back within this inefficient down move, or some people call it a fair value gap. So what will get me shorting is if we do something like this, deviated, right? That's trigger one. Trigger two is getting back within this range. So something like this, accepted, Then I'm looking to take it all the way down to this low. That's the initial low. And then I'm looking to take it down to, well, this level. And also maybe take out this low. So that's what I'm looking at with ES. But right now, until it gets the trigger, it's still a real danger to have this inefficiency right here. So where it could take a really large gap up. But if it gives a deviation, then I'm looking to go on prime and looking to get puts in. So yeah, that's overall with ES, and you need to understand ES to understand Bitcoin as well. So that's what I'm looking at with ES. Bitcoin shorter picture. Let me actually show the FTX chart. This is the FTX chart, but yeah, bigger picture. Since we made the 17.5K bottom, well, the local bottom, this was our range. I'll go more in depth about it later, but so we have this range low here, deviated on the first attempt. I know it's weird. So here support, 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 and then if we zoom in, we can actually see it flip to resistance, but on daily we can't see it. So this is the mid range, and then the range high. I use a conservative range high by using this first initial swing high, and we got some sort of a triple swing right here. You can see here the mid range is a valid level, and it's all valid level. So if I zoom in right now on the 1 hour, ignore all this FTX wick bullshit stuff and focus on here. So when we deviated this red line, I did long it from all the way here, and I cut it around here. And I actually posted live that I would get back in if it can flip to support. But I was looking at the 1 minute chart, and the 1 minute chart, it was just not reclaiming. So sometimes I do trade. Yeah, you can see here. I was sort of comparing this to, so you can see here, it's not reclaiming. So I was sort of like comparing this to this level right here in May. This is where I really started doing TA, but we have this range low support here. You can see here, range low support. And then I was comparing it to this moment where we just wouldn't reclaim. And that's the fractal that I'm looking at. So I cut my long quick, let's just say it that way. So right now, if I would think a bottom is in, what would I need to see? I would need to see, or a short-term bottom for me to get swing long. Right now longs are level to level. I know Bribel took a few nice longs yesterday morning, but if I were to get bullish, it needs to reclaim this range low, maybe deviated, get acceptance, then I'm looking to target into here, and then here. So that's what I'm looking at. But ultimately, if it doesn't do that, which I think is higher probability, then we have this chart. It's the Bybit chart. So what I have done is this is the same range as the FTX range, but what I've done is taking the Fibonacci tool. This is our one. Oh, well, it's flipped right now, but yeah, this is our range high. And I'm trying to get a 0.5 on my Fib to the 18.6K range low and treat it as a mid-range instead. So there, we have this range now. So you can see here, we've broken, I showed you earlier on the FTX chart, but we've had acceptance below this upper bound of the range. And now we are in the lower bound of the range. You can see here. And the lower bound, the lower bound of the range, we have this mid-range, which is what we got a reaction off of. And then you can see I also have this key 17.5K swing low mapped out, which I've shown that we had a daily close below it. And I also have this key liquidity level marked out. This was in 2020. Usually on sharp wicks like this, people put their stops basically longs. They place their stops right around here, and typically
Right.
what happens is that if price goes to a stop, right, this will be a rally to take out bears, people shorting stop, but then gets back under, then that's a valid setup as well. So I'm looking at that swing low, but ultimately bigger picture, I'm looking at let me zoom back in. I'm looking at these highs, the same order block demand zone I talked about. So this was old range high. If you think about it, right? If you think about it, this was a range. Back in here, this was a range. So I'm looking for something. So basically, my accumulation plan is to long this red line, which is the range low. So whenever when price finally, let me zoom back. back out. When price finally dumps to that level, I'm looking for something like this. So something like this, retest, maybe swing fell that previous low, reclaim, acceptance. There's your trigger. Then I'm looking. It's not gonna be like this because usually with
Right.
accumulation it takes longer. So yeah, but my first initial target would be here and then here and then most likely gonna look for shorting setups at that area. But right now we just ping pong between these levels.
Yeah. So you're not looking to accumulate for like a hodl position, you're just trading?
I am looking to buy spot down there.
Okay.
But I like to use my trading entries for my spot entries as well, just
Okay.
because I trust my trading setups. So that's what I'm looking for if I'm getting into spot.
I got you. So
Yeah,
basically we have different perspectives. Well, no, we have different ways of getting the same perspective because it looks like you think we're going down to about 12 as well. Which is very interesting to me because your analysis was completely different than mine, and we ended up with the same result, in which I
yeah.
think, and I think you think, is a higher probability than this being the absolute bottom. Um, so yeah, that's very interesting. So
I mean, I
where,
would flip bullish if we reclaim 18.6K. If this was just a
yeah,
short-lived deviation, then I'll get bullish.
I think we would go to 22.5 if that happens.
Yeah, if we do that, we might even go 25. But
Yeah,
it's not happened yet, so I'm not gonna assume that. But
exactly. There's
with
always,
how shit things been looking lately, I have a
right.
stop loss for my long as well. So that trigger I talked about, but if it does something like this, I don't know, maybe rally it up. But acceptance below, then I'm looking to cut it because
Yeah.
then it should have held this box if it's done a deviation. It should
Yeah,
have
I
held
mean,
it. There's no reason why we should see acceptance below it.
no, because I'm gonna have a cash position still. When we get down to my lower box, I'm still gonna have a cash position. Um, because I want to. We can still see your computer. Oh, okay, you're getting a
I know.
chart. Uh,
Yeah.
so because we could go to 8K. You know what I mean? Like with all
Yeah,
the
yeah, yeah.
macro. If
I'm just actually pulling up this chart to show 8K.
yeah,
Yeah, but
if we're down to like 14, 12K and the macroeconomic environment goes to shit, you know what I mean? Like we can see that 8K level, you know? And that's why
sure.
I'm going to
Yeah,
start
I
like
agree.
I'll start DCAing at anywhere from, like I said 11 to 12K. And that's where I'll start, and then I'll put, you know what I mean, every week I'll put in, 5 grand, 10 grand, or something like that. You know what I mean? And I'll do that for the next few months, and find that accumulation zone, and then after I'm done filled my hodl position, then I'm going to trade the shit out of it because we're going to be in a huge range, in my opinion. I think we're going to be in
Yeah,
a huge
accumulation
range.
range and hopefully a
Right.
breakout to the upside.
Exactly. And I'm going to leverage the shit out of it. Um,
Same, bro.
yeah. Because once we start going up, once we break, say 25, we're going to go. Like, we're going to go. It's going to be the bull market and it's going to rip.
Yeah,
Where
I
do you
think we at
think,
least 48K, 65K at least.
where do you think the top is next cycle? Did you
It
really put any
it really
work into that
depends.
yet?
If the world see it's everything is driven by how the state of the world is. It's not. I can't just like predict where the next top would be on the chart. I mean, it's really gonna be how the Fed takes its action. Like if they want to turn on the printer again. I know some people
Yeah.
think they're gonna like they're accelerated. They think they're gonna turn on the printer. I don't know, but
I don't think they're going to yet.
I mean, if they do turn on the printer, then probably somewhere from 100K to 200K. But
Yeah, that's what
that's
I'm thinking.
yeah,
Yeah, I mean,
that's just fun talk for
at
now.
at the start of the next bull cycle is when I'll start working on analyzing a top. But that's at the start. You know what I mean? And
Yeah, I'll look
because
for
it's
something
gonna
like this,
like you like
something
you
like this.
said, it's
You
gonna
can see
be
this is the initial high, and then we couldn't hold above it, and then we had this final retest to sell off. and then right here we had another deviation as well.
Yeah. Yep.
Actually, let me actually pull up something. Moving averages. I think your strategy to sell 55K it was from a pair of moving averages.
Yeah.
Yeah. Let me actually pull up the 12 and the 21 because I think yeah, you can see we sort of consolidated below the 21, and that's
Exactly.
where you got it.
Yep.
Yeah. I wasn't in any of this 69K stuff. I was just out here and just start doing
Yeah.
oats and NFTs.
Yep.
But yeah,
So
I want to pull up this range real quick. This is the KuCoin range. So how I derived this range was by looking at the 2020 yearly candle. So the coronavirus here. All right, this is a yearly open and this is a yearly close. You can see after 2020, all this is 2021. We use the range highs as support, and then here we held it, but in zooming in, as I showed earlier, we got acceptance below on the 1 hour, and that's what triggered the sell-off. And I want you to mark out this interesting 0.5 level, which is 18,000 058. And then if I go to the 30-minute chart, if it lets me, um, so yeah, oh yeah, there's your retest acceptance below it. Look, so yeah, acceptance below, and then we had a break with conviction of that low as well. But you can see that this 0.5 level of the 2021 yearly candle is really respected. Obviously, this is hindsight analysis, but it's just to mark out the importance of these levels. You can see this is a 17.5K low, deviated, retested as support. So that's how I know these levels are valid levels, and
yeah.
they're just not random levels. And you can also see here. So you can see here we retested this and then broke out. And then what's also really interesting is that the FOMC, you can see this is right to the mid range. I know we deviated this high, but zooming out now, I want to bring attention to the 0.25. So that's around 12.6K. It also matches pretty close to this high. Maybe we deviated, who knows? But you can see these wicks, these lows right there is sort of like, I mean, some people call it a bear flag, but or extending channel, but that's the next level I'm looking at. So I mean, we could go to 7K as well, but it's going to be level to level. So depending on when we get there, I'm not saying we get there now. I'm not saying we do something like this and you should just short now. That's totally incorrect. But if we get there, right, that same setup I talked about, acceptance above it, then I'm looking to take the long. But if we do something like this, that's when I think we go to 7.1K.
You have some redistribution.
Yeah,
You
then this is
know.
most likely just another
That's what I think.
well,
That's what I think we just went through was redistribution.
yeah, I mean, this is a very clear redistribution right here.
Yeah,
You see here.
exactly. You got your automatic rally, your
Yeah.
yeah, I mean, it's yeah.
I
Well,
mean, what we have been doing since this year was just breakdown, consolidate, probably a mid-range support of 21 yearly candle, breakdown, redistribute again, and then another leg down, redistribute again. It's just rinse and repeat
yeah.
until we find like a range bound environment where like this. Then your moving averages are also going to start um sort of like flattening, and then you
And
probably
then they
get a divergence on
converge.
the weekly
And
RSI as well.
yeah, and then yeah,
I mean, I
exactly.
mentioned I
And then they
pulled up the weekly
converge.
RSI.
And then the moving averages converge and
Yeah,
cross each other at the same time, start to fan out, make that confirmation.
it's
That's
flattening
where I'm
because right
long.
now all the moving averages are
So,
down. They're pointing down.
what's your next trade? Not financial
My next
advice,
trade,
not financial advice, but what's your next
yeah.
trade? Like short
So
term,
I'm
like
I'm
short
looking at
term.
this short term range right
Yeah.
here. So let me actually just zoom in real quick. I mean, I'm more positioned in alts than I am in Bitcoin, but
Okay.
if I am to take a trade on Bitcoin, it would probably let's see here. It would probably be an SFP since let's see here. It would probably be an SFP of let me actually find it. I actually haven't been looking at Bitcoin chart today. I actually want to use my Bybit chart.
Yeah, that's what I
So
trade on. I
this is the
trade on
short-term
Bybit.
range. I'm zoomed in. You can see it has respected it, the short-term range. So if it reclaims this pink line, um, if it reclaims this pink line, then what is it? 17.2. Let me see, does it match this one as well? It's so it's basically this. So it's we can keep it simple. It's
Last
basically
high.
this. Yeah, last high. Then I might or I might look for a deviation short, just because right now it's very dangerous to be knife catching. So
Right.
maybe something like this, or if it's a clean reclaim, then I might just take the long. But let me actually start on a fresh chart to do some more short-term analysis. So this is a DXY chart. Oh, it's nuking below. Yo, that's sort of acceptance right now. So let me start a blank chart.
Yeah, that cracked down.
Yeah, we can use this chart. I don't know why I have these lines. Maybe just to mark the high, but you can see we made that low on June 18th, which is 618. It's really interesting. So I'm gonna start with the weekly.
Well,
Um,
what's your short-term trade?
Short-term trade.
Yeah.
Yeah. Let me pull it up right now. So let me go back to this chart. So basically, if it reclaims this pink line, then I'm looking to take it back to 18.6. But then if it doesn't reclaim, if it does a deviation, then right now we're in between. So right now it's sort of like a no trade zone for me.
Right. I
But
got
something
two levels. I got two levels and two trades set up. If it breaks those levels, I'm either going to long or short, but it's a very short-term trade. It's a scalp. It's not a swing trade. It's just a scalp. And then it's very close. I just got, a little leverage behind it. So I'll do well on a scalp. But, that's really all it is. Well,
I
so
think I'd rather trade with higher time frame levels right now. I'm
yeah,
looking to either, well, we've so the weekly closes. I mean, it's heading into the weekend. I'll have to see. But if it does if it does, like I said, if it does reclaim 18.6K or closes this weekly candle as an SFP of this low, then um I'm going to be looking to long, because you can see the initial SFP or swing fail pattern. For those that don't know, we had right here is the black line. We had, let's see how much of a rally we had. We had a 5.9% rally, which I consider to be a decent rally.
it's decent.
Yeah, with Ethereum as well, I'm looking at, so right now we're let me expand this range real quick. I've been just busy all day, so I haven't been looking much at the charts. Let's see here. Does that match as an EQ of this move down? Uh I'm just more or less looking at swing fail patterns. So I'm looking at this high here. So it's a really simple over and under scenario where we rally over and under. I'm looking to short down to this level of support, and then down to here. That's what I'm looking at. So zooming in,
Gotcha.
if I zoom in, so that level is around 14 tenths. That's what I'm looking at. Um, basically, you can see here we have this liquidity level for people shorting. Basically, people place their stop loss at the highs. So if we do, let me
Yeah,
get
and
my
then they
epic
get
pen.
hit. That's why I don't
Yeah,
place my. Yeah,
if
I
we do
don't
something
place.
like this,
Exactly.
breakdown, then we had one opportunity to get above this level. Second chance, we couldn't get above. Then I'm looking to short it down. Well, some people will call it like a double top. Then you will target the neckline. That makes sense as well, because if you're looking at this range, right, the neckline is sort of like a mid range, right? So that's what
Yeah.
I'm looking at. So
Okay.
let me also I talk about my ES trades. I mean, I'm looking to, so like this, then I'm looking to short because it has reclaimed this inefficient area, but we but now we're back under, so that shows weakness to me, and I'm looking to sort it down into this box, looking to fill all this since we had this inefficient move up from CPI. That's what I'm
I
looking at.
gotcha. Um.
But yeah, I'm more
Well.
or less looking at, yes, since right now for Bitcoin, I don't really think I'm interested in chasing shorts right now. Since I actually did short Bitcoin from this level and I shorted some oats. I'm still holding my oat shorts, some of the oat shorts, but I closed it early around here since I just wanted to go to sleep.
Yeah.
Yeah, but
Yeah, so we're almost out of time. So
yeah.
if you have any closing thoughts, anything you want to wrap up, about your trades or anything like that, anything you just want to wrap up or say to the audience, yeah, man, go ahead.
Actually, I do have I do have something to say. This might be a fresh chart. It's something really quick. ETH USDT. I actually just thought of something. Not this range. Hold on. Just give me a second. I'll pull
You're
it up
good.
really quick. Uh, it's the monthly. Yep, it's this level. So we're in November. So on ETH, I actually do have a setup. Forgot about that since TradingView sort of took all my stuff away.
Yeah, trading
So
view is shit sometimes, man. They took all my work away one time. Like my whole chart was clean. I'm like,
yeah,
what the fuck, dude?
it took away my ES chart. I had a fractal. Actually, I had a fractal. So this is a W wave, X wave, Y wave, and you can see within the W wave we have a A, B, C, and now we're seeing the same type of A, B, C stuff.
Yeah,
So I'm sort of mad too, but let me zoom in. So this is derived with October's candle. So you can see we sort of reclaim this range low here. Um, so I do have some setups. So that's around 1450. So again, we're just coming up to the levels. It's the same. It's the same stuff. If we can see acceptance above the level, then I'm looking to. You can see it's also a confluent inefficient move right there. And then you can see this inefficient move close at the gray line. So if we reclaim the gray line and hold, then I'm looking to fill at least to the 50% of this inefficiency and the mid range of this candle, which would also be confluence with the deviation I talked about earlier, or we just take it to the range highs. That's what I'm looking at with ETH. Um, this is not range high. This is mid range, but I'm looking at the lower bound of the range, if that makes sense.
okay. I got you.
Yeah, that's basically it. You can see we have the same triple swing pattern there. But
Yeah.
yeah, that's essentially it. That's what I'm thinking of for Bitcoin, Ethereum, and overall ES. I don't have much of a trading setup for crypto right now, just because they're sort of in the middle of nowhere. But I do
Yeah,
have a setup for ES.
I got you. Well, I really appreciate you sharing your insights. I appreciate you sharing your trades. I'm sure the audience does as well. It was great having you on again, man. It's always a good time. And yeah, everyone have a great morning, great afternoon, great evening, and I will see you tomorrow.